Hello everyone, this is Juan Sarmiento and today is Thursday, October the 22nd. Okay, I have gone through my positions here. Let's go quickly through them. I'm just looking for whatever would be expiring in the next 8 days. So we go to the Analyze tab and then click on the Add Simulated Trades, and you can see here that my shorts expire in 15 days. So the next expiration that takes 8 days is October the 30th. So only those are worth rolling over. If they're November or further out, they're just plenty of time before we need to do any rollovers. So let's go to the Analyze tab again and click on close this up and say Risk Graph. And then we can see our position here and November 6th. Okay, so it's plenty of time to expiration. All right, so I'm not going to close that or do any rollovers. A roll up might be something, but as you can see, we're already delta negative. And a roll up means we sell one of our long calls and buy a higher strike price. In this case, 125, that's plenty. And the deltas are negative. So as long as the delta is close to neutrality, I'm happy, okay? Because the stock can tank, and that would be great. But what if the stock goes up? Okay, we want to also be sure to be making profits or close the trade altogether if things don't look good. Okay, look at the volatility, it's very high on all our positions. So that means that all those options are overvalued, but we have plenty of short options here. Okay, let's look at the calls here. We have 105 calls. We have two of those. And we have two long calls here. Great. But we have four short calls. So we have 2 plus 2 equals 4 plus 1, 5, okay? In short, we have 4 of them. So we are balanced well enough on this case. Let's move on quickly to ATVI. And here, November 6th, this is perfectly balanced. No need to change anything. BABA, again, it's balanced. And November 20th is expiration way out there. So plenty of time for us to make money. HD, same thing, November 6th. Low, November 6th for the shorts. And here again, Nike, November the 20th. November the 13th for this TGT. And look at this. The stock has been dropping and we have our deltas are neutral. So that's all we need to know. If you want to take a look at the chart here. Oh yeah, it's collapsing here. It looks like after a big rally up, it's now taking back some of the profits, and we are close to delta neutrality. So what would happen is volatility would increase if the stock keeps on going down. And by the way, if it lands here at 144, we will get our 145, we will get our maximum profits. Obviously, what I did was I roll it up to this 160 calls. And that was a way to take profits. And you could return to what it was before. Let's take a look at the monitor tab and go 90 days back. That's good. And here we have TJT, trade history. And here's my roll up here. We essentially sold my 145 calls, long calls, and bought at a higher strike price. And that is a vertical spread. If we were to look at that from the perspective of what did this vertical do, let's analyze that. Hide everything else. And we have a vertical which is now making money. So you could potentially close it and you consider that as a good move, you made a profit. And if you say analyze the opposite, what would we be doing? Essentially buying it back at a lower strike price. Oh, $36. So something wrong here. Oh yeah, here's where we are. Here is the current price. So yeah, we haven't made. We could reverse the trade, and if we did that, like so, then my trade will become bullish again. We don't want to do that as the stock is collapsing, but at some point I could do that. Let's move on to UPS. And here is November the 20th again. Okay, so we are fine in regards to the expiration of all the trades we have. However, I do have two potential trades here. Let's look at them in our Excel spreadsheet here. I have DGX and LOGI, Logitech I think it's called. And you can see here that I have trade, trade, do not trade, and do not trade. The only thing that concerns me is the current IV percentile is rather 27 is rather high. Let's take a look at the current IV percentile by saying Logi here. Here's the trade I brought it in from that spreadsheet. Let's look at the chart. Oh yeah, look at the volatility. Well, considering since March, that volatility is relatively low, but not the lowest historically speaking. Okay, so it's not very low. That means this volatility could continue to decline, but if the stock goes down significantly, it could pick up again and go back to here, the higher side of it. And if it did that, well, then we would be making quite a bit of money. Okay, let's take a look at the trade here. The IV is pretty even, and you can see it here that the difference between the volatility of the front month and the back month is only slightly, here I have, it says trade. If it is more than 3%, it would say do not trade, but it's minus 1.72. So it's not favorable, but it's tiny. It's 1.72, that's fine. The liquidity says 3.2, that's 0.2 above my cutoff point. So considering that we have excellent earnings here, beat expectations by a very wide margin, I would say that induces me to make sure that I could, try to see if I can trade it to the best of my ability. So I would say here it doesn't bother me too much, and it doesn't bother me too much the current IV percentile. We can't have them all the green light, so to speak, but if I have two and I'm motivated because the difference in earnings between expected and actual is so big, I'm motivated to enter the trade. Okay, we can color this green, by the way. And this is, I would call this orange, and this I would call red. And then in the end, I make my decision based on the two greens. This green is very, very interesting. Okay, let's enter the trade. Okay, and why is it so interesting? Because the beating expectations by such a wide margin implies that the stock will go up much higher, provided that the market overall goes up. Okay, so I had calculated here 4 lots at $26.02, and that adds up to $10,000, which is 10% of my account. Let's enter that trade. Create duplicate. Okay, we can, let's give it 10 cents here. And then we'll wait until it gets filled. Okay, for the second trade, I'm considering this DHR And we have here the trade that I'm considering, so I'm going to copy here and paste it here, analyze it, and here is what it looks like. We can remove previous attempts. Okay, so I'm going to open it here, and we are selling the November 20th options and buying the March 19th. 230 is my strike price, and as you can see, I'm doing only one lot here. Let's analyze it on the Excel spreadsheet, the HR. Let's take a quick look at the chart. And the stock is making new highs, and they just reported earnings. They beat by a wide margin. So all that good. And you can see new high is a good thing to have. The volatility has declined very strongly as a result of the earnings. And here we have an indication to trade here for the difference between the expected and the actual earnings. The implied volatility, let's look at the chart here on the Analyze tab. 29, 30, low looks very even. And we put those numbers in my Excel spreadsheet to compare the front month options versus the back month options in terms of volatility, and the difference is actually on our favor, 0.44%. So that's great. As long as it is less than negative 3%, is in our favor. That's good. The skew is favorable, so I want to trade it. The only thing that bothers me is the liquidity. Okay, so let's take a look. 53.75. All I have to do is create duplicate order and compare between the mid and the natural. And we have 53.8 versus 57.8, and that's pretty high. Okay, but the current IV percentile, you can look it up on the trade. Scroll down, and where it says here today's option statistics, it says current IV percentile 12%. That's very low. So the only thing against us is the liquidity, which means that the trade may or may not get filled. Okay, you may have to give up too much in order to get that filled. And what I mean by give up too much is when you see the Analyze tab here, the HR, let's say that in order to fill, you have to increase this price, the mid, until it hits a price that will sell for. And if this is too wide, you will be giving up quite a bit of advantage. So let's start off with the 53.8 and see if that gets filled. If not, we would increase the price progressively until we say, hey, I'm giving up too much here. Okay, let's do 53.9 and let's see if that will get filled. And also we need to change the number of lots, because what did I calculate here? I calculated 2 lots, okay, to be 10% of my account, which is $100,000. So a little over 10,000 is fine. So let's confirm and send and say multiple, and here I'm going to say two lots, okay, and that's $10,780. And then we'll wait. Oh, it got filled. That means that really the bid and the ask weren't that big a spread after all. It's just there and to deceive you. So be sure to try to make it on the low end first and see how it goes. And then the last trade that I have is VGX here. Okay, let's copy this. It should say buy. And I'm going to show you one more new thing that I hadn't told you about yet. Okay, paste. Well, I'm having an issue here. Let's go to DGX first. DGX. Okay. All right, here it is. So I have 2 trades, one more expensive than the other, yet they are essentially the same trade. Let me show you. Here we have 2 back month, February straddles long, and one short, November 20th straddles. So that's the Gini trade as you know it. But there is a transformation we can make, and it really turns to be out to be the exact same trade. Look at this. Okay, slightly different. There is something not going quite right. So make sure that the numbers are correct. But what I'm doing essentially, instead of saying buying two calls, two puts, and selling one call and one put, this is what I do. I'm buying two long calls and selling one long call and buying one put. And the price is a lot less. You can also do the opposite. No, let's say analyze trade. And instead of calls, what is called, change it to put. And what is put, change it to call. And these are called Seagulls. Okay, these are called Seagull trades. And that's what they look like. Okay, and again, 2 to 1 is the ratio. Okay, so 3 long calls, 2 long calls, and 1 short put. Okay, that is the equivalent. I got it wrong. So let me see. 3 long calls, 2 short calls, and 1 long put. Right. The difference is 1, but look at the prices, how they change. 3 puts, 1 put, and 2 calls. Okay. So I'm going to enter this, whatever is cheapest, and in this case is, well, this call Seagull. When the 2 calls, let's call it call Seagull, and when there are 2 puts, we call it put Seagull. We need to short 2 puts, 1 call, and 3 puts. Let me repeat this. Analyze trade. And change puts to calls and calls to puts. And then pick the cheapest one. In this case is the call Seagull, obviously. So that's what I'm going to pick. Whatever is cheapest. Okay, it's the same trade. Make no mistake about it. But the way the volatility is distributed, this is more favorable. So I'm gonna, for the first time, enter a call Seagull for your benefit. Okay, so create duplicate order, confirm and send, and look, we can enter 4 of those because my price is $2,500. So I can actually say enter 4 of them, and that's $10,000. And then we wait and see if it gets filled. If not, we would change the price. Okay, that's all there is to it. So that is pretty much what I had for today. Let me review the account here. We are at $97,000. Remember that we started this account at $50,000. And lately we haven't been doing well, but we have to keep on our system. Eventually we will make it all up. Okay, and that's all for today. So thank you very much. Again, I will change the price until it gets filled. All right, let's cancel, replace, increase by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 cents. And I will keep that on until it gets filled. Okay, thank you very much. See you tomorrow. See you next Thursday, that is. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.